Hey there, everybody. Welcome to G&G Live. This is where we sit down with a couple of attorneys and open the legal books and open the legal minds to you, the viewers at home. Happy Friday, happy October. Feeling a little fall in the air, and I am loving it. We are here today with our good friend, you know her, she's been on before, Jennifer Brugh, wonderful tax attorney and of counsel attorney for G&G Law. We're here to talk about an interesting new development with S Corps, S corporations, which are one of the most interesting types of business. We did a whole other live stream about them, all about what they are, whether they're right for you, what you need to do to get one. So go find that first, and then come back to this one here, where we're going to be talking about this change that might change some of the calculus about whether one is right for your business. Now, just a quick little disclaimer. This video, of course, is for educational purposes only. It doesn't entail any sort of legal relationship between you, the viewer, and us, the people on the other side of the screen. And especially as laws change, for instance, this one right here, we're not responsible for the information staying accurate as laws continue to evolve, especially. And because going back to the attorney-client relationship, because there's not one of those, there's also no confidentiality. So if you have any questions, we will be monitoring the chat. We'll take any questions that you have at the end of the live stream, and then just be careful about what you put in there because it's not confidential. We know Michelle today. It's going to be me. I'm Ian, the office manager here. Just going to be me and Jen today chit-chatting about this new S Corp law. So let's get wonky. Now, this new S Corp law. Is the S Corp better now? Quick answer, Jen. One word, yes or no?
Probably not.
All right, that's two, but we'll take it. So first, let's just break it down to basics, Jen. From the very beginning, what is an S Corp?
Okay, so an S corporation is a special designation that the IRS created that allows a company to take advantage of some of the corporate protections and advantages, but not have all of the requirements like having a board of directors and meetings and minutes. They still have to have some meetings and minutes, but less so than a corporation.
All right. Why would people want an S Corp, just really quickly?
You know, there are advantages to having an S Corp. First of all, if you're looking to take on investors like S Corps a lot better than they like sole proprietorships because there are more requirements on S Corps, more paperwork so they can see things in writing. S Corp is also advantageous to a company that is generating a lot of income that is passing through to the owners because it can save them money in taxes once they reach a certain income threshold.
Yeah, interesting. So this new law is rolling out. So we know S Corps pretty well, but this new stuff is going to change things. This is definitely something to talk with your CPA or your accountant about as well if you're thinking about making this decision and what this means to you. But it's a change in the law, and we are lawyers. So let's talk about it. The bill in question, Senate Bill 2531. Jen, what is Senate Bill 2531?
Okay, there's a whole lot in it. It's a new tax act that was passed in Illinois. I'm going to focus on the part that is actually relevant to today's conversation, which is the pass-through tax. So you'll hear the phrase PTE tossed around a lot. PTE is us tax nerds' little acronym for pass-through entity. So there are different kinds of pass-through entities. Partnerships are a pass-through entity. S Corps are a pass-through entity. What that means is that the net income from the business passes through to the owners and gets taxed to them. Basically, what this law did was it kind of created a workaround for what we call the SALT cap. SALT is state and local tax. The Tax Cuts and Jobs Act that was passed a couple of years ago had all kinds of stuff in it, but one of the things it had was a cap on how much of state income taxes paid a partner or shareholder of an S Corp or partnership could claim on their federal tax return as an expense or as a deduction. Basically, this Illinois law makes it so that the entity, the PTE, can take the state taxes that would be paid by the individual shareholders and claim it as a business expense. So the company pays your state taxes. And then that reduces the amount of net income that passes through to the shareholders.
Wow. Okay. Interesting. So there's the, just to kind of recap, uh, as a non-attorney, and as many of you are not attorneys, is like, let's get our heads around this a little bit. So the S Corp, this PTE, pass-through entity, um, this new bill reduces the amount, or this new bill increases the amount of business tax that an individual can write off as a deduction, kind of
Kind of.
ish,
So
getting close.
on their federal tax returns, your S Corp shareholders can get a deduction for state income taxes paid, state and local. The maximum they can claim is $10,000 federally. This law makes it so that instead of the shareholder paying their state income tax, the company will pay it.
Oh, okay.
And there's no
Okay.
cap on it.
Okay. Interesting interplay. Changes the relationship between the company and the shareholders.
It does.
Uh, Now, we talked about the SALT deduction cap. That's the state and local tax that this new bill increases. So, thinking about this new information, if I have a single member LLC, should I elect now to be taxed as an S Corp?
Not necessarily. The calculation to deciding when you want to be an S Corp versus a sole proprietor for most people comes down to how much am I going to pay in taxes, right? They want that bottom number. What is the total cost to me? And, previous to this law, I told everybody you need to be making a lot of money. Like your net income needs to be up there before you even consider it because the costs with having an S Corp outweigh what you're going to pay in taxes. This law came out and I went, whoa, game changer. And then I did the math. And the math says it's still true. You need to be having a lot of net income before this is going to make any difference to you. Because think about it federally, you can already deduct up to $10,000. So, unless you're going to pay more than $10,000 in state income tax, this isn't really going to affect you.
Mm. That's an interesting thing. In theory, it seems like it would work out that well, but unless, if I were a business owner, unless my business is making really big bank, like you said, to get up to that 10,000 level in taxes, which I don't know about you, I don't pay $10,000 in taxes, uh, then this doesn't really change the math, even though it lifts that cap. Interesting. Is there anything else in this bill that a business owner can do to benefit from it?
Again, not unless they're having substantial income. For small business owners, the calculations still come down the same. Talk to your accountant because there's a lot of things that come in, like whether to be an S Corp or whether to be a sole proprietor really is very situation specific. So you want to talk to your accountant because one of the things that's going to come into play here is what are the other credits you're entitled to? Do those outweigh it? Um, are all of your shareholders from Illinois? Like, if all of your shareholders don't live in Illinois, this bill may not help you at all. Um, if you are not a single member entity, and so you are forced into partnership status for tax filing purposes, because like if you're a multi-member LLC and you don't choose anything else, you default to being a partnership for tax purposes. So if you're in that situation, think about this a little more because the PTE may actually apply to you by default.
Hmm. Hmm. Okay. So the ultimate takeaway that I'm getting is there's a lot of math, so talk to your accountant who will have all of those numbers and can crunch all of those and help you make that calculation about whether this law is something that can actually benefit you.
Yes, yes, because there is a lot of math. Like, I ran numbers when I was trying to figure this out and decide if it was good for small businesses. I ran numbers just basing it off like you get standard deduction, basic qualified business income deduction, but for individuals, you're going to have other things at play. Do you have other income outside of this? Are you married filing joint and your spouse has income? Like, what tax bracket are you in? That's going to make a big difference in whether or not being an S Corp would be a good move with this new law.
Interesting. Yeah. When does this take effect?
Ooh, I don't remember. I think, oh, it's effective for this tax year.
This year?
Yeah, it is
Holy cannoli.
in effect right now. In fact, the state of Illinois, because if you made this election for this year, here's the problem. The company is supposed to make quarterly estimated tax payments toward this, right? And
Mm.
we're 3/4 into the year. So luckily, the state of Illinois put out a nice big announcement that they are going to waive all late payment penalties for those. So companies can catch up and can take this election for 2021. They do have to affirmatively elect. So if you're looking to do this, if you have a company where this would be a good move for you, make sure that you go visit My Tax Illinois and make that election. And you have to do that every single year.
And then is this, I guess, automatically effective for S Corps that are in existence now?
No, not unless they
Oh,
make that affirmative
all
election.
right. Everybody needs to go do this if this is something that you think could work for you.
Yes.
And speaking of making that election, how about would you do it?
Go on to My Tax Illinois. If you are an S corp, either you or your accountant have access to your Illinois online tax account, and you can go in there, and they have nice little big announcements telling you how to do this, and you just click through those links, and there you are.
Well, all right. I love it when they make it easy. They don't always
Yes,
make it easy,
Illinois
but I like it
Department of
when they do.
Revenue rarely makes it easy.
I like it when they do.
Yes.
All right. Well, that's all we got today. Just this quick little update about a gnarly new law with a lot of math that makes things a little bit more complicated for the already complicated S Corp. So thank you all for watching and for tuning in. If you have questions about what we do outside of this kind of stuff, we do help with S Corps, we do help with LLCs and all that kind of business formation, not the taxes specifically, then you can reach out to us on our website, gglawoffices.com, and there's a contact form there. We would love to hear from you through that. You can give us a phone call, drop us an email, shoot us in the comments. We'll get back to you on that. In the meantime, let's see. I think that's all about, yeah, that's about all that we got. We do S Corps, LLCs, business formations, all kinds of stuff, everything that we need to get you going and growing. All right, thank you everybody for tuning in and for watching today. Have a wonderful weekend, and we'll catch you next time.